Although I gave everybody 10 minutes, where everybody's back here, we'll keep the meeting rolling. Our next speaker is on financial updates, Mr. Gabe Boldra. Boldra.
Thank you. Yes. All right. Thank you, Mr. Chair, members of the board. You know, when I was given this kind of opportunity to come speak to the board, I looked at a few different options on this, and you know, we spend a lot of time, I think, on our regular board meetings and our budget workshops that we've been going through, talking about kind of our finances as a whole and how we're doing and where we're going. So I geared my presentation to be more of a focus on kind of an educational session for the board on internal controls, the monthly financial report, kind of key things to look at, things to understand when reviewing that, and then going into some high-level stuff on, you know, where we're at and where we're going, and then finally closing with a explanation and kind of a little presentation on, you know, the capital improvement plan, and then showing on, you know, from a graphical standpoint, what that capital improvement plan means to us from a cash standpoint, and just kind of going through and explaining that. So, you know, it's a workshop, so by all means, if there's questions as I'm going, please feel free to, you know, stop me and ask. All right. So, what I kind of want to go through today is, I said, you know, kind of effective financial management for the board. You know, and where your role is in reviewing and understanding the monthly financial reports, understanding what internal controls are, and where kind of the board fits into those internal control processes, because you are part of our internal controls as a fiduciary board. An update again on our SFD finances, and then what our goals are for fiscal year 18-19. One of those things being a comprehensive annual financial report, or a CAFR, and then the other component of that being kind of financial policies and what we plan on rolling out with those. So starting with the monthly reporting. So obviously one of the main reasons for our monthly financial reports is compliance with the law. You know, the statute changed about 4 years ago now, 3-4 years ago. ARS 48807 changed and really revamped the way monthly financial reports needed to be created for fire district boards. It also allows you to kind of have an oversight of the monthly transactions. You're obviously not each and every single one of you is coming in every single payroll run or check run and evaluating every single transaction. So the monthly financial report is designed to give you that month-end recap of what the financial transactions were for the month. It's your ability then to also monitor where we're at from a budget to actual standpoint. You know, you approve the budget, and once that budget is approved, it's your fiduciary duty to ensure that we are following the approved budget. And then also the internal control component, where if we don't have good internal controls, you know, it's essentially the garbage in, garbage out. You know, if there's not good internal controls ensuring that the financial transactions are recorded correctly and accurately, the monthly reports are not reliable sources of where the district finances are. So going in, start with the actual financial report itself. Why is it not opening? All right. There we go. You all have seen, this is actually our March report. So, and this may be a refresher for some people. And so I'll kind of go high level, but if there's questions, again, please feel free to stop me. So the monthly report starts off with with a cover page of as far as what's included in that report. In addition to that, what a lot of our clients find valuable is this snapshot section here, where we give, you know, a high level overview of the revenue and expenses for the month, where we're at from a year-to-date perspective, as well as if there's any variances, both to the positive or the negative. We like to explain that here. So, you know, the board member, whether they're educated in finances or not, is able to pick up the document, review it, and understand from a high level standpoint where the organization is. The next sheet is the balance sheet, which gives us a listing of all of our cash, all of our assets, and all of our liabilities. as a board member, you know, some of these things may, you know, ask questions about the things you don't understand. You know, one of the things you want to look at is where are we from a cash position? Do we have the funds in the bank to cover our expenses? When we get to the end of the report, we do a 12-month rolling cash flow, which kind of helps support that we have the funds available to cover our needs for that fiscal year.
Gabe,
Yes.
in relation to that individual form, is there certain hotspots or line items that you utilize to check and balance against, so to give you a quick view of where we're at based off of that sheet?
Right, so again, some of the things is kind of that cash balance. Another big thing to look at is what are our receivables doing, which are, you know, in these line items. So our property tax receivable, we don't adjust that on a monthly basis because we have no real good tracking of that from the county. But so we adjust that at year end. But our intergovernmental receivables, our ambulance billing receivables, our wildland receivables, all of those are updated, you know, real time. So those are all updated, if not when payments are received and invoices invoiced, they're at least updated at the end of the month. For example, like our ambulance billing, we take our ambulance billing reports at the end of every month and reconcile our receivable balance to that. So that's one thing you want to see. If our receivable balances are starting to decline significantly, we want to know why. Or for some reason, are we getting more payments in than we have in the past? Are we not billing as we should be? And vice versa, if our receivables start to climb higher than where the normal range is, or where you normally see them, and that's, again, a board member looking at that on a regular basis. If you start seeing them climb, going, you know what, Gabe, our ambulance receivable, you know, at March is, you know, 305,000, but now here we are at June and it's 600,000. You know, what happened? And those are questions to ask when you see significant changes. Because is our receivable balance climbing because we just got, you know, a really busy month and we've doubled our normal volume? Or is our receivable balance climbed so high because we're having issues in our billing and we're not actually, we're generating the invoices, but we're not getting them out, or we're having collection issues? And so those are things that, I mean, obviously we look at, but also as the board, you should be looking at and asking questions as to why are we seeing these numbers change significantly month over month, or even year over year. Our due to, due from accounts, which are our 19,000 series accounts, those are, you know, when we transfer monies between funds. And so kind of one of the things on those is you should see all those have an offsetting entry within there. So if we've got a due from grant funds, you should see a due to general fund in the grant fund budget area. And you'll see that actually if you look at, for example, grants, which may be hard to see. Zoom in a little bit. So right here we got due to grants of 53,000, but then over here we've got in the grants due to general fund of 53,000. So whenever you see due tos and due froms, those are things we look at making sure that they balance. Going down to the liabilities, one of the big areas on liabilities, like our receivables, is our accounts payable. That's, you know, a live tracking of invoices and payments on invoices. And so while we at Sedona stay on top of our payable process, there could be an end of the month where we get a rather large bill in and maybe haven't paid it, you know, yet, and it may not be due. But again, when you start seeing that accounts payable balance climb, that's a good reason to ask, are we having issues with, you know, with cash flow? And you can look back up at the cash balance and also look at the 12-month rolling cash flow to see if that is, or is it just a function of timing? You know, we got the quarterly workers' comp bill in on, you know, March 25th, so it's entered in, but it's actually not due till April 15th. So it's just a matter of we've received the bill, it's recorded, we just haven't paid it yet. Additional liabilities that are tracked on there are payroll liabilities, and those we reconcile on a monthly basis with part of our payroll process. In addition, down here we have, like for example, one of the things is coming down, there's our payroll liabilities, and then the other thing that we don't have on this one is all of our other audit adjustment liabilities. So our lease purchases, our compensated absences, and all those are reconciled once a year. So looking at those is good on a annual basis, looking at that audit report and looking at our liability balances year over year and looking at the changes in those long-term liabilities. These are all of our current liabilities.
So when you say that those specific ones you just mentioned are not on there, the annual ones,
Correct.
is that something that would kind of skew the numbers there, or just not make sense to put it on this document?
So actually, I prefer to have it on this document. We have some issues with the software on being able to get, there's too many funds to be able to run a complete report. And so I'm working on kind of reducing the number of funds we have and consolidating that down so we can get all of those on one consolidated balance sheet on a monthly basis. There are some really good things about the Tyler software. There are some things that I don't like about it. And this is one of the things I don't like about it. And that'll also shows all of our fixed assets as well, which I didn't mention on here. So all of our buildings and stations and the accumulated depreciation for this. So really on the monthlies, you're looking at our current assets and liabilities. And then on the year-end roll-ups on the financial statements, you see those long-term assets and long-term liabilities. Going down, reconciled cash balances. One of the things with the law change was basically the board is to review bank reconciliations on a monthly basis, and instead of including the lengthy bank statements with all the schedules and the reconciliation statements, those are all available for the board members at any time, but we could provide a snapshot, a summary of that information in the board packet to show the board the reconciliation has been performed, and here's where our beginning cash was. Here's a total of our disbursements out of our cash accounts, money going into our cash accounts, where we're at from the end of the month from a bank balance. And then if you see underneath cleared balance, it goes uncleared transaction. So these are the transactions that have hit our financials, but have not actually hit the bank yet. And then you get actually our cash balance according to the register or the balance sheet that I showed you previously. Then we have our budget to actual report. I'm sure most people are familiar with this one. This is probably the one that most board members look at the most. And again, you're looking through, seeing where we're at from a revenue standpoint, both on a monthly basis and a year-to-date basis compared to budget, as well as from a expense standpoint, monthly and year-to-date basis. And I would hope we do a good job explaining variances, so you don't need to ask the question on variances, but it's important to ask questions on variances if they're not explained to you. So you understand that from a board member standpoint, are we over budgeting and underspending? Are we overspending? Are there issues just a matter of function of timing? And so you understand where the organization is at from a budget standpoint, a budget to actual standpoint, ensuring that your fire chief and his staff are managing the budget that you approved appropriately.
But is it true to say then that some of these are timed because of monies allocated to the district from the county level aren't always what we think they are or what they should be at a given time?
Right. So to answer your question, Mr. Chair, we base our budgeted property tax revenue off of historical collection averages. Mm-hmm. So, we know we've got our two big times of the year when property tax bills are due. But, we also know that, in May, we may receive 10% of our total revenue for the year, and I'm using an arbitrary figure. And that's based off of a historical average. But something may change and tax bills may go out late. Or, for whatever reason, the county is switching accounting systems and they're delayed in their reporting, and then our reports may not match up from a property tax revenue standpoint. And so we do run into that. We try to match up with the historical collections, but sometimes they don't match up. Going down, then we include graphs for you guys of all the information that I just discussed. Cash position, fixed asset additions, and this will become even more relevant as we look at moving towards a capital improvement plan versus a individual budgeting for capital expenses. And then here's really one of the most important report, well, I should say not one of the most, but a very important report for the board members to review on a monthly basis. Goes back to, I know not every single board member is signing every single check. So this disbursement log here gives you a listing of all the transactions that have gone through the account, both revenues and expenses. And as a board member, it's important to review that on a regular basis and ask questions about transactions that don't seem ordinary and necessary to you, or may just seem high, or wait a second, why are there, multiple checks to the chief this month? but it is, it's your opportunity to review all the transactions in a snapshot, and then be able to come back and ask questions about specifics. And then the final is, as I mentioned, that 12-month rolling cash flow.
And so for people that don't know the process, so when you're looking at that, you all get that report, so you all can all see that. So it's access to everyone, so that's some of those internal controls and checks and balances. But then the process is that one of you comes in and signs those checks, and I countersign, or someone from staff countersigns. And so between staff knowing the processes and things that are happening behind the scenes, why that check is there, why that one is here, what we're doing with that, you also have the opportunity, because many of you go through the actual purchase orders and look at stuff and ask a lot of questions and things like that. So there's a lot of checks and balances, and then after all that's done, you are then approving these statements at a board meeting where you all agree to, or if you didn't agree, would have the opportunity to ask a question, point it out, or be in conflict with why something was spent, or object to, or vote no on approving the financials or whatever you may choose to do. Does that make sense as to how that whole process works, the checks and balances, and how we assure that nothing is happening behind the scenes that's not appropriate?
Yeah, and we'll go into more of the controls and how this is just part of those controls.
And also, as part of the checks and balances, any check to our fire chief does not get signed by him. It
Right.
gets signed by two other people, one being a board person.
Right.
Correct.
Right, you can never sign, yeah, not, like I said, I'll talk about internal controls a little bit more, but it's one of those things with, one of the biggest components of internal controls is you don't sign checks to yourself. You always have other people sign checks to you, so. And then finally is the cash flow piece, and that allows the board, and the district, the chief, and management to see where we're at from a cash position and ensure we have necessary funds to cover our expenses through the fiscal year, and even end the fiscal year with a positive balance. By law, we cannot end the year in a deficit. And if this shows at any point that we are going to end the year at a deficit, statute requires the board chair to notify the county that the potential of us ending the year at a deficit. So, okay.
That's not happened to us that I'm aware
No.
of ever, but certainly not in the last 6 years. Okay, does that happen at time to time from some of the districts you work with, or that you've heard of in the past, or no?
They usually don't notify the board
They
supervisors.
forget to.
They forget. They forget. The bank lets us know, though. Lets the board of supervisors know.
Gotcha.
When they're still on the line of credit at the end of the year. So, but it does happen. It has happened. Obviously not to Sedona, and hence why the law changed and requires a 12-month rolling cash flow as part of the monthly financial reports. So, because board members said we didn't know that we were out of money. So,
Wow.
all right. So now we're going to talk about fraud and internal controls. So the fraud triangle is really, helps people understand how fraud occurs. And it's pressure, motivation, opportunity, and rationalization. So it starts with kind of that pressure or motivation piece, whether external or internal. External is my as simple as my lifestyle outweighs my means, or I want to send my kid to college and I don't have the money to do it. I want to get that new car. It's typically more of the person not being able to live with the means, that live within their means. Internal pressure is a little different. Internal pressure is, the chief keeps making me work harder than everybody else. He keeps making me come in on Saturdays and put in overtime, and I'm not getting paid what I should get paid, and so I'm being treated unfairly by this organization. Then we look at where that opportunity comes in, and that's where there is a lack of internal controls. There's no segregation of duties. There's that gap in the process that allows for a person to see an opportunity where they think they can take something and not get caught. And then it finally comes into the rationalization phase where nobody's going to notice this missing. I'm just going to do this once. I can't tell you the countless times we've come in after the fact and you hear basically the person say, "Oh, I thought I was only going to do it once, and I was going to put the money back." But that opportunity presents itself, they rationalize it, and they get away with it. And then that whole cycle continues. The pressure continues, the opportunity's still there, and they continue to rationalize. And that's how fraud occurs. And we obviously can't control the pressure and the motivation, and we can't control the rationalization a person goes through. But as a fiduciary board, as your contracted finance director, as your fire chief, as your administrative staff, it's our job and our to stop that opportunity and put in those controls, ensure there's a segregation of duties to help prevent fraud from occurring. Okay? So what are internal controls? Our internal controls are a process for assuring achievement of objectives in operational effectiveness and efficiency. It ensures reliable financial reporting. Puts us in compliance with laws, regulations, and our own policies, which we'll talk about a little bit more later. Internal controls also plays a crucial role in both detecting fraud, but also preventing fraud. And again, when we're talking about fraud, we're talking about our physical resources and intangible resources, but more or less our physical resources, our money. On internal controls, a couple things. Internal controls cannot prevent collusion. So we mentioned earlier that the fire chief can't sign checks paid out to him. But if a board member and somebody else collude with the fire chief, then now we've had our internal controls bypassed through collusion, and we're not going to catch it at that process and at that standpoint. And that's where we go back to the financial reporting and the financial oversight, because although we've got internal controls in place from the initial standpoint, if there is collusion, those aren't going to stop that. And so it's going to take a board member, our services, somebody else looking and going, well, wait a second, this doesn't make sense. Internal controls should be reasonable and not inhibit effective operations. I can't tell you how many times we come in to organizations and their controls are beyond reasonable. And there's typically it's the smaller organizations, and it takes them an hour to write one check. And it's like there is important to have controls in place, and you do need to have them, and you need to have documentation and approval and authorizations. But having every single board member sign the APS bill before you pay the electric company maybe isn't reasonable. And so whenever we put in controls and we talk about controls, we evaluate that. Is it reasonable? Does it make sense? Is there a more efficient way of doing things? Your chief is all about efficiencies, and so we look for that. Because efficiencies are valuable, they do save time, they do save money, as long as they don't inhibit what the intention and purpose of the control is.
You meant that in the most positive way.
No, I did. I meant it in a very positive way. Yeah. And then finally, why are the controls important? Well, you don't want to be the next headline. You don't want to be recalled. The chiefs don't want to go to jail. And we want to reduce the risk of losing assets. Frankly, these assets, everything within this district's not ours. It's the taxpayers. And it's your job to ensure that the taxpayers' assets are protected. And that's where your role as a fiduciary board comes in. So just some examples, and as we kind of go through these, Chief, if you want to kind of chime in too and talk about Sedona specific here on some of the things that we have here. So first is tone at the top. And I have to say, of all of our clients, the tone at the top is on point here. You're from the board down. Your board. This board is very engaging. They ask good questions. They actually clearly seem to read my financial reports because I get questions on things included in them. You'd be surprised. I usually go up and give my financial report, and I look at my boards, and they're just a bunch of 5 blank stares. So, so there is that tone at the top. You are interested. You do care about the finances. You do want to know what's going on. You do want things explained to you. And going to the management, the fire chief, he ensures that things are done above board, things are done with transparency, transactions that may be questionable, the chief looks at and inquires on, and we dig into it and find out, is this truly a reasonable expense for the organization, or is this not? And does somebody need to reimburse the district? And this is mainly talking about like credit cards and stuff. But so there is that tone at the top. Authorizations of transactions, we've hit on that. Chief hit on that a little bit when we're going over the financial report. Is payables aren't processed at this organization until they've been approved. Once they've been approved, they're then signed off by a member of the administrative staff, the chief, assistant chief, and then finally approved and signed by a board member. So there is an authorization process on all transactions. You do have knowledgeable independent review of your documentation, both from our services on a monthly basis as well as your annual audit. While Pam performs the bank reconciliations, again, we review the bank reconciliation reports and bank statements on a monthly basis. Physical inventory is done on a regular basis. We've segregated our duties as such as we explained. The chief's not signing checks to the chief. Board members, there's a segregation between who signs checks from an administrative standpoint. There's the person who's signing the checks never enters the checks into the accounting system. The person that enters the checks into the accounting system is not the person who reviews the transactions. And so there's a breakup in every step of the process. From a receivable standpoint, we have our ambulance billing personnel that are responsible for billing and receiving our ambulance revenue. And then we have our finance people that are responsible for reconciling that revenue that's received.
Actually, the receivable comes in from, Jody actually takes the checks coming in and logs them. So she intercepts all that, and then they say, here's what we got, and someone says, yep, that's what we billed, and it all lines up. So it's a process. The checks, only one person has key to the check, can actually find the checks.
Yep.
That type of stuff. I mean, so there's quite a bit of process in place here. Back to Gabe's comment, sometimes, not to the point where we can't function, but at some points it's pretty robust and best practice stuff.
Yeah, we have, and funny you kind of say because you can't function. We did, when we first got here, we found there were some controls that were like, people are like, well, I can't do that because he's got to do that or she's got to do that, and they're usually not here till this day, and so I can't do anything till they get here. I'm like, okay, well, let's look at why we're doing that. Okay, now we can change that process a little bit because we've added in a different control later on down the road. And so it's allowed us to kind of create some of those efficiencies, but not inhibit, our control needs. And that goes right into what Chief was saying on restricted access, physical controls, blocking access. Not everybody has access to the checks. Not everybody has access to the accounting software. And so that's one of the ways of protecting this stuff and having a control is simply that, is somebody comes in and brings in a payment for an invoice. Well, if I'm the person receiving the payment and I also have control to the accounting software, guess what I could do? I can go in there and remove that payment, remove that invoice. So now nobody knows that payment's came in, and the district's none the wiser, and we're not also going to bill that person now because that invoice has been removed from the system. By segregating those duties and having the person receiving the money separate from the person who has control of the accounting software who's doing the invoicing, we eliminate that opportunity. On the checks, I mean, I know we don't physically sign, we electronically sign, but never sign the checks without reviewing the supporting documentation. And that's why we send that out to you ahead of time as far as what transactions you're coming in to approve, so you know ahead of time before you come in. All credit card purchases should have supporting documentation. And then finally, one of the biggest things is create a culture that values transparency and documentation. You know, if the chief says, oh yeah, don't worry about explaining that. I mean, and I'll use this example. We came across some things on the uniform reimbursement that we questioned. And the chief and chief, former Chief Pichera, the late Chief Pichera, we're very quick to say, wait a second, where's the benefit of this to the organization? And requested that documentation, and we've received that documentation versus, you know, a culture of, it doesn't matter, don't worry about it. And so we are in a good place from that standpoint. And is there always room for improvement? Yes, and we always continue to look at our processes and our procedures. And one of the big areas that I'll talk about in a minute where we're going to work on improvement is policies. And while we have some loose policies, we have some written policies, we don't have a complete set, and we're going to work on developing that.
So from the internal control piece and a few things that Gabe spoke to, you know, that fraud triangle, you know, we have all these things in place to do everything we can possibly do to eliminate any opportunities. Does that mean, though, in one of those sides of the triangle, if you find someone that can create some opportunities, that, you know, there's always a possibility, and so we watch for those things. That's why we have our audit that looks for, you know, irregularities. That's why we have now third-party, outside, independent finance folks that can look at this stuff and this doesn't look right, things like that. Haven't had to experience any of those things in Sedona Fire's history that I've been here, but or probably before that too, as far as I know. I don't know of any other problems ever in our history. But as I think Bill mentioned, somewhere in the $900,000 range, that, you know, someone that did this stuff, another fire district, and, you know, the interesting thing was that they literally took our audit, which they found on our website, recreated our audit with their name on it, changed the numbers to look something like their numbers, and submitted it to their board for a period of time, more than 1 year, I believe.
Yeah, it was 1.8 million, not 900,000.
Wow.
Yeah.
I didn't want to correct Bill, so I was just using his numbers, but it was,
Yeah.
so, but they were able to use our specific audit to create this stuff, and so we have the gentleman that comes and speaks every January or whatever, you know, that creates that relationship. I'm the auditor, I was in your office, things like that, but in those cases, they never showed up into that organization. That tone at the top, the tone at the, you know, at the board here, you guys helped create all that. And I gave you, you know, you do 12, 13 districts, and as you stated, we're, you know, doing the right things right, I guess, if I can summarize what you said.
Yep.
And we're proud of that. We're dedicated to make sure it continues to happen, and we're always continuing to work on any opportunities to improve what we have. But it's a great organization that works very hard to assure that we're as transparent in everything that we do, and that our processes are right. And we now got some little dongle that, you know, has got a number that changes every 8 seconds that can only access, you know, certain bank records. Having this thing that, you know, it's kind of standard practice in a lot of ways. Nothing special that we do, but it's, you know, there's a lot of processes behind how this whole thing works, and it's not Mayberry with a, you know, safe in the back with all the money or something like that. So.
Thank you. And just for the board's information, that 1.8 million was because you had one person doing everything. There was no segregation of duty, and as Chief said, there was no tone at the top. We were nowhere near any close to any risk of that. In fact, if something did by chance get through, it would be caught on one of our other many levels of internal controls. So.
And if you want to just take it one step further, the consanguinity, or however he learned how to, I'm still learning how to say that word. Or maybe it's Finnish. No, when a Finnish married. So the whatever that word. The fire chief and the office worker were related, as in father, daughter.
Yeah.
So again, one of those things that's no longer allowed, or you get it. So.
And, you know, something I'd like to add, because I think early on I made it a practice, since I was signing a lot of the checks, was to particularly look closely at any reimbursements to staff for travel or for education, just to make sure it looked in line. Those are the checks I particularly look closely at.
Yep. Good.
And yeah, so like you're doing that, you look at all of them, there's not a gazillion of them, you spend a lot of time there, but you look at 100 checks or 200 checks, it can get, so you look for ones that stick out, and the auditors don't look at every single check we wrote. There's thousands and thousands. They selectively look at certain things, and randomly pull things, and so having that ability every so often just go, hey, what's this one? You may not even really think it looks out of line, but just to keep that checks and controls in place to go, oh, she might ask me about this, I better know about all of the checks, because that's what you should do and know about. That's, again, one of your functions to make sure, so.
The best was a
Gabe,
board member
Gabe-
that, oh, yes.
I have a question. Can I assume that the district that used our report, they didn't have the auditor making a presentation?
No, they didn't. They, yeah.
How
no,
did they handle that?
So it was prior to the law requiring the
Okay.
auditor to make the presentation. Some auditors did. I'm sure Jay Park always did, even prior to the law. But really, I mean, there were some issues at the board level as well, as far as tone at the top. You know, because questions were asked, but they were never answered, and then there was no follow up. And so there was and then the auditor kept changing. She kept changing different names of auditors as well. So.
When Walker Armstrong got that and said, hey, here's this audit you did, they said, we didn't do an audit for you ever. Hey, that looks a lot like Sedona's audit. And they went back and looked, and word for word, it was Sedona
Wow.
audit with,
Yeah.
so the time and energy and effort put into that.
It was one of her better fake audits. She had some that the numbers didn't even match up from page to page, and that's what eventually started raising red flags. Was the bank started going, well, wait a second, your audit numbers don't match in the audit report, and then they reached out to the auditor via email, and she responded on the email, and then with her name at the end, her actual name, not her fake auditor name. So.
I assume that their punishment was Gray Bar Hotel, or they
Yeah, so she was finally convicted, or no, I believe she took a deal, and I believe got 5 years. And her father, last I heard, was contemplating a plea bargain, and and then depending on what that was, I don't know what the sentencing was gonna be on that.
Yeah, this is been a 5-year process, so she's in a hotel, and they're just having court dates even just like last month. They're supposed to have one last month, so it's a long, lengthy process. But so, you know, in all fairness, in government, you know, we're here to serve the public and do good and things, and occasionally things like this happen, which create a black eye for
everyone,
other
for everyone,
organizations. And they
right.
say, well, if it happened there, is it happening here? As a fire chief, I'm, you know, same thing. I'm like, wow, how could that happen? What are we got our bases covered? Are we not doing something like that, or have any openings in the, you know, holes and things like that? So we're, you know, always watching and looking at other, and this around the country it happens, you know, in private business and public entities. So it's always looking at best practice, and with Gabe having an opportunity to see that on a more global basis, he's in even a greater ability to kind of, you know, whoa, this is something new we're seeing.
Well, it'd be great to share with the board, what have you, when things like this do come up and so on, as examples.
And I think
Yeah.
we probably did get some of those links to some of those stories on occasion from me as a board where you weren't on the board at the time. But I try to provide kind of heads up stuff when things like that are happening, whether it's of an interest just to make sure, you know, that understand what we're doing or what's happening in our field, or hey, this could have some pushback onto our organization, overflow, just to know where we got this handled, or, you know, whatever. So I try my best. I don't say I get them all, but I do my best. And hopefully that they don't have to come too often, but on occasion they do.
Any other questions on internal controls? Okay, so moving on to kind of update on finances. Since, you know, our engagement, I just want to kind of highlight a few things that we've helped the district with, and the district's done on its own. Is, you know, one is the general rate increase on our ambulance operation. Our rate had not been changed in quite some time. We did a general rate increase, so just real quick refresher for the board members that weren't here is, for our ambulance, the ambulances in the state of Arizona are rate regulated. Not only is it regulated as far as entry into the profession, the rates and charges are regulated by the state as well. And so in order to change your rate for services, you have to request that through a formal process through Department of Health Services. You basically submit performance financial information, various financial documents to them. And then they do an analysis on your cost structure, information within your own geographic area, and then they basically make a recommendation on that rate. So we suggest a rate, and they do their analysis, and then they then in turn determine if the rate you requested is fair and reasonable, or any adjustment to such. And if I remember correctly, they actually recommended we go a little higher on our base rate and a little lower on our mileage rate. And that's typical in more rural areas, because you do have higher mileage. And so they don't want a lot of money being generated on the mileage side, because the whole purpose of the mileage billing is to recover your cost for your
Maintenance.
your fleet, correct? So that adjustment, we've had some change variations in volume, but we were around $200,000 increase in additional ambulance revenue because of that rate increase that was awarded. If you remember last month, we are going to go for a kind of the annual deflator from Department of Health Services, which is their automatic rate increase that we can get, which is 2.64%, I believe.
2.65, so it's
2.65.
an automatic but not automatic rate
Right.
increase.
Right, they called it an automatic, but we still have to send them a letter and say, yes, give me the automatic.
I just received at 11:09 the formal document that's been approved, so I just sent it to you.
Okay.
So it was approved effective today. We'll increase our rates by 2.65%.
And so that is, I guess the reason why they don't make it fully automatic is because that annual deflator is based on a couple different indexes they look at, and it can actually go down. So obviously you don't want to request it in a year that it goes down, but you get that ability to request it when you want to. Organization continues to work on benefit costs. As you know, the cost trend neutralizer that the chief and Betty did about 2 years ago, I want to say, on health insurance has saved the district from over $400,000 in increased health insurance costs. We've shopped around on our workers' compensation to help find a better rate. There's always looking at kind of global employee benefits from vacation leave, sick leave, compensation structure, all these things to help kind of reduce the impact of our growth and expenses, because we do know our expenses are continuing to rise. We are continuing to work on growth of fund balance. If you remember, when I first met with this board, we had a very small amount of cash on hand due to the size of the organization. We have improved that drastically, and we continue to work on that. You'll look at, when we go to my next slide on kind of some of our projections, you'll see it kind of levels off. And so while we are working on some things, that's kind of going to be one of the next things we want to work on getting in place, is growing our unrestricted fund balance a little bit more. Enhanced budgeting. We found some areas that we could do better in our budget shell process, and also just enhancing and streamlining the budget process. I'm not tooting my own horn here, but I've heard from the chief and others that our budget process has been much simpler and smoother than they've experienced in the past. And so it's allowed the organization, management staff to focus on other areas of need and not be buried down in budget for 6 months out of the year.
So if I could expound on that a little bit. So yes, toot the own horn, it's been much easier to operate in the way that Gabe's done the budget process. To be very clear, that doesn't mean that it's whatever you want you get either. And so our budget process is, and we've talked about this before, but since we're bringing it up again, we got some new board members, is that essentially, why do you need what you need? Why are you asking what you're asking for? Have those justifications and have those reasons why our budget is what it is for each individual activity. So special operations, which you'll hear from Jason Coyle in a little, later this morning, afternoon. They have some functions, core mission stuff, and they've got a plan on how they're funding all the different disciplines and rotating some, instead of having these big spikes, hey, we're going to try to fund this much every year in different technical
flatten it
needs,
out.
to flatten it out and create a more neutral cost impact to the budget. Facilities, you know, you'll hear from him later, Buzz Lukowski talking about some of the ways that the things that's happening there and what they're working on. But all of those numbers get allocated in on a needed basis. And I've said this numerous times. I actually talked to someone just yesterday at a luncheon, and they were just talking about how, you know, some governments, if you don't spend it, you lose it. And you lose it this year and you don't get it back next year.
You gotta spend it.
And that's more true in city government, where the fire department, the police department, the public works, whatever it is, they have a chunk of the pie and they're given this money. And if they don't use it, it goes back to the general fund. And then the next year, someone says, hey, you only need this much. Why, you know, we're not gonna give you as much or whatever. All of our budget is completely funded and for the purpose of fire protection. EMS. So if someone doesn't use their budget, the incentive, the disincentive, maybe I should say, to spend your money just because you'll lose it next year, it doesn't apply. So sometimes people are applying principles that I don't work in city government, I work in special district, may happen in other forms of government. In ours, if you don't spend your money, it gets carried over and it gets reallocated in your next year's budget, or you know, if you need it or however that goes. So it's a much different model that sometimes gets confused by other types of government. As well as there's certain administrators that might say, hey, if you don't spend your budget, I fought for that budget. If I go back to my board and say, hey, we had $600,000 we didn't spend, I'm gonna look like a bad guy. Or conversely, you'll have people that say, hey, if I go back to my board and say, hey, we have $1 million we didn't spend, I'm gonna look like a good guy. Look how responsible I am. Both of those, you could say, well then, wow, you taxed the people $1 million more than you really needed to. How good are you? You're actually a bad guy. Or, hey, there's $600,000. You know, so you can play this card any which way. Our folks, back to the top, culture at the top or tone at the top, is what do we need to operate? What do we need to be successful? And how does it fit into the budget, short term and long term? And sometimes we got to say, hey, we really want to do this project, but it's going to have to wait 3 years out because that's where the next window is that we can kind of put this in there. Or this is a non-negotiable issue, that's a safety issue, it's a whatever issue, it's got to get done now, and we're going to put it in here. Or we're going to say it's going to need to be done, but it's going to take a while, and we have to phase it in, and it's a better. There's just all different ways to slice it. And we may get into some of these things going forward. I haven't seen Gabe's presentation, but when we're talking about some of these things, it just dawned on me that that's the mentality that we have towards how we budget, why we budget, what we spend.
Chief, question I have on that is if there is an excess at the end of a year, a budget year, and you do your carryover, does that mean that following budget for that particular item or unit is now less that much of the carryover? Did you follow me?
Yeah, I get that. Yeah, Mr. Chair, so it's not, if we do a carryover, so, for example, this budget that we've presented to the board a couple times in draft form, reflects a $500,000 carryover. What that carryover does, it doesn't go to any one specific line item, but what it does is it reduces the burden on the tax levy for that next year. So we've got an additional $500,000 in expenses that we're not covering through non-levy revenues or through the tax levy revenue. We're utilizing our fund balance to cover that.
Okay, so that gets to stay a little bit lower.
Correct.
So, yeah, so the levy would stay lower in this case is where we see that realization is in the levy. But in a specific budget line item, so if I was telecom, let's say, and they've got all these projects slated, and for whatever reason, the items are back ordered, they can't get the project done, we end up with, you know, $100,000 that was supposed to be spent this year that was not because of whatever circumstance. The next year, we would be looking at, hey, this project obviously still exists, assuming that it does anyway, I shouldn't say obviously, but assuming it still exists, then we would have dialogue, and their budget may go up by $100,000 next year. We'd be in this process right now saying, Bob would be saying, hey, I didn't get to project, you know, Zebra, and the $100,000 I was gonna spend, I'm not gonna spend this year, but I really need to get it done first quarter next year. We would add that to his budget next year. It wouldn't be a snooze, you lose. It would be an add. Does that make sense?
Yeah, I understand that.
I think that's what you're asking also.
Right, and then it gets, yes, it does answer it.
So the bottom line budget would go up by, all things being equal, the bottom line budget would go up by 100,000, but if I carried over that 100,000, the levy would be the same. Okay.
No, that's perfect. time to have that explanation. I don't go into budgeting anymore. And then finally, the development of a comprehensive capital plan and funding mechanism for it. So I just want to kind of I just have a few little graphs, charts to show here. So this is kind of our projected assessed value growth versus the mill rate. And this growth in assessed value is based off the results of the round study. And then obviously the tax rate here is based off of our projected non-levy revenues and expenses over the next 10 years, including our capital improvement plan. And as you can see before, we had a much, I don't know if everybody remembers, we had a much, our growth on our tax rate was higher than the growth in our assessed value. And the concern and the risk we had was hitting that 325 cap rate. Now with both the changes in expenses and how we fund capital, we've actually are gonna see a decrease this year in our tax rate, and then a slower trend up to where it almost levels off a little bit, and a slow increase. Obviously, it's still going up, but it's not going up to the point where it's exceeding our 325 cap rate, and we're building capacity and maintaining our capacity within our levying capabilities. So, and I said at the budget workshop, when I presented the round study, doesn't mean we have more money to spend. It just means we are not at risk of hitting that cap rate and not having the ability to raise any more tax levy funds and having to cut services. So that's where we're at there. And then here's kind of what we look at from a expense, revenue, and fund balance standpoint. So we'll start with these red bars, or yellow, I'm colorblind. The yellow represents our total expenses increasing. And then here's the tax revenues. So obviously the tax revenues don't cover our total expenses. And then this gray line here represents our total revenues, climbing and exceeding our expenses. And then what we have here is our fund balance. So obviously we mentioned we're taking some money from our fund balance for its carryover in these first couple of years, and we're weaning off that from a planning standpoint. We will still continue to do that on an as-needed basis. And we may use some of it to grow our fund balance, our unrestricted fund balance, which I'll show you here in a minute. Or we may again use it for carryover. But what we're eliminating is that use of carryover funds in our planning, which has been done historically. Because obviously the problem with that is if we don't have carryover funds in one year and we've based our plan on that, we're now at a point where we're raising the tax higher than we thought. Or if we're at a point where we're near the cap, we could be at a point where we're going to exceed the cap and we have to look at reductions in service. So again, good healthy growth, and we're maintaining our fund balance and not, overspending.
Gabe, is the gray line primarily the ambulance revenues and wildland fire
Correct.
revenues, things of that sort?
Correct.
Okay.
Wildland, ambulance billing, and
Telecom revenue,
telecom revenue. Thank you, Chief.
grants.
All right, so some of our goals for fiscal year 18-19. I mentioned kind of in the beginning, we are going to do a CAFR, comprehensive annual financial statement. Right there is the definition of it. But what it is we take and we do a report of our organization. We go into much more detail on the finances as far as the cost structures, the cost centers. We talk economic and demographic factors within the district. We talk about growth within the district. And then the audit report then becomes part of that document. And so while the auditors will still audit the financial statements, they will no longer be responsible for preparing the financial statements. That'll be part of the CAFR. And then they will audit not the CAFR itself on the demographic information, they'll review it, but then they'll audit the financial statements themselves. And so what that'll do is that gives more transparency to the public on the district's finances, as well as allows us the ability to now look at recognition for our finances to our peers, and one of them being the Government Finance Officers Association, the GFOA, GFOA, on financial reporting and budgeting and financial management. So it allows kind of, a lot of times in the fire service, there's all that energy and focus on, outside accreditation on the operations side. This looks at us getting some accolades from a financial standpoint. Another thing we're going to work on is a complete set of financial policies that will govern all aspects of the district from a financial perspective. That process, once we have the policies drafted, will be a process where the policies will be introduced to the board through a series of meetings. And then probably the best way of doing it is to have the board then approve those policies in sections, instead of having to have one big massive set of policies approved at one time. So we will develop the drafts, we'll work with management on the draft policies. We'll get them to the board for their review and input, because again, they will become board policies, board financial policies, and then get them adopted and in place.
What is your timeline for that?
Yes. Fiscal year 18-19.
Great. Good.
So, yes, by the end of the fiscal year. Hopefully sooner. I hope from the time we get our drafts done to approve, we're probably looking at 6 months. It just depends on when we can get the drafts completed based on other workload and stuff. So, and then part of that though, and I've got a little blurb in here, and I've shown this graph to you before, is where we talk about spending authority. And I know we had some discussion on internal controls earlier, and I think the importance is the authority, the spending limit authority, can change based on also what the other controls are in place. And so one of the things I do want to look at is the fire chief's signatory authority is rather low in comparison to his peers of similar size. And going back to, efficiency, there's a lot of stuff that comes before this board that is already things that have been approved through the normal budget process, but that is coming through again. And I'm not talking about capital. Obviously capital is going to be part of the capital plan that is going to require require approval. But this will allow the chief to operate within his authority for the items that the board has already approved. And again, this is, I'm giving this information to set the stage, and then we can discuss and get into details on what that number actually ends up being and where the board is comfortable, and if there's some other kind of compensating control the board wants to have in place in this. And so we can talk through that more. This kind of gives you the opportunity to think about where the board's comfort level is, and as we develop these policies, we can come to something, the board can decide on what they feel comfortable with.
So in terms of that, Gabe, you'll be working with our chair, Mr. DeSoto,
Yes.
to get that on the agenda?
Yes.
Great.
That will, as part of the financial policies. Yes. So in summary of the first part of my presentation, again, the board has the ultimate fiduciary responsibility. This is not anybody's money but the taxpayers, and the board is charged with the duty of protecting the taxpayers' interests. The monthly reporting and understanding of those is what helps you execute that responsibility. Internal controls are in place. They must be appropriate, and you've got to have knowledgeable people ensuring those controls are being followed and things are being reviewed properly. Our financial outlook is continuing to improve. We still need to watch and look for ways to reduce costs. Our costs are still rising, and some of that is due to inflation, but we always need to look at better ways, more efficient ways of doing business, both from a practical standpoint as well as a fiscal standpoint. And we need to look at our fund balance and making sure that we maintain a healthy fund balance and not get ourselves to the point where we don't have the funds necessary to fund the organization, both from a day-to-day standpoint as well as the capital needs of the organization. And then the CAFR will be prepared for this fiscal year ending. So fiscal year ending June 30th, 2018 is the year that we'll prepare the CAFR based on. And then, as mentioned, the financial policies as well.
Very good.
Any questions?
None so far.
All right. The capital improvement plan. Are we ready to set to?
You're good, yeah.
We're good to go into that? Okay. All right. So I wanted to, or the chief wanted me to kind of take a little bit more time and dive into the capital improvement plan a little bit more and not necessarily talk about the specifics in there. I've got one where we're gonna look at the specifics in there, but really about how it works, the funding mechanism, and how we utilize it. So, wait a second. Okay, there it is. The capital improvement plan, basically one, ensures the capital needs of the organization are met. We all have been down the road of the capital needs of the organization not being met. Not a large amount of funding or a appropriate percentage of funding was allocated to capital over the last couple of years, 10 years. And we're now at a point where we need to make decisions and put a plan in place to bring the facilities and the equipment up to effective operating levels. This plan provides a funding mechanism for that. Can we redact that in the record?
Fraud protection?
A funding mechanism for such. And one of the big things is it gives us a level funding for the plan, and it doesn't require ebbs and flows in the levy to fund the plan. So we're not increasing the burden on the taxpayer in one year and then dropping it in the next year. And so components of the capital plan is it's just a plan. And I think that's something that everybody needs to understand when this gets put out, is Sedona Fire is not saying we're gonna spend, however $1 million in capital. This is a plan, and the plan can change. The economic factors can impact that plan. Maybe cost of doing business can go down for a manufacturer, and what we thought an engine was gonna cost may be less. Or unfortunately, costs can go up, and we continue this trade war with China. Steel prices will go up and the cost of manufacture could go up. Then we also look at political factors, and that's where the board comes into place, is the board may not want this plan to continue as it was originally presented. And then finally, organizational needs, and how those change. And so this is that. Our budget is our budget, when we do our annual budget, it's kind of set that this is what we're gonna spend our money on this year. And then we have little leadway to go inside and out of that. Whereas a capital plan allows some flexibility as long as the funding mechanism is there, both from a, hey, yes, we can do that, or no, you know what, we can defer that. And I'm gonna pull up the plan and kind of show you some of the things that we've done already from when the plan was originally introduced to where we are today, where things have already been changed and moved around. So, let me go back to that. Too complex. Never mind, guys. Sorry.
There's some sound effects there, but the wah, 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 wah. Like,
Let's try that again. All right. So, zoom in a little bit. So, here's our capital plan. And now, one thing we did include in here is our debt service. While our debt service does not go into the capital funding piece or come out of the capital funds, it comes from operating funds. We have included it in here because it impacts our ability to levy funds necessary for the capital plan. And so when you look at this, I don't know what is going on. I don't know. As you can see here for 18-19, there's a red square here for Station 5. And the reason for that being that where we're at from a funding standpoint, it didn't make sense to have that in there. And so we've already gone through and changed this plan and revised this plan to move that down. And same thing here with Station 4. You can see that this was pushed out a little bit. Now, granted, the status of how the facilities are in may cause us to make changes and move this back up. But I wanted you to see that, hey, this is how this plan is fluid. In fact, that what's in here can change and will change to be able to balance all the other needs, as well as maintain a reasonable rate on the levy.
Yes. And, Gabe, in terms of Station 4 being pushed out as far as it is, that certainly caught my attention in reviewing the budget. And we know that there's some very pressing needs for that station that might have to be addressed and cost money. Why, could you please explain why it's been pushed out that far?
I can take that if you want. It's probably more operational. Gabe just plugs in numbers.
Okay,
He's a number guy.
thank you.
So we looked at this, well, which is numbers. We looked at this, and the reality is that we should move that forward. But by moving that forward, it creates a higher budget and a higher increase in the levy. So our goal was to try to move it out and limp it along until Station 6 drops off, and that helps balance that budget. That's the sole purpose. If I could have my way, I would move it closer and be doing the station, maybe doing 4 and 5 together, maybe one year after the other. There's a lot of different variables, and those are things that, as we take this snapshot, this is what we think we need to do. There may be let's just hypothetically, we may say, even though we have it all the way out in 2024, we get to the stage where we're ready to do 5, and station's got some technical issues with it that say, man, we don't want to spend this kind of money repairing something that we're going to tear down. What if we moved it all the way up? If Gabe, I may show you, there's probably bandwidth. You could move that all the way up if you want. You would have less capital reserve, it would just change your outlay, and you'd have to budget more money in the capital funding down the road to end up at year 10 or 11 in this case with the right amount of money that we believe you need to have in the capital fund 10 years from now. So this is really a snapshot of how we can create a more level funding in our budget and balancing those needs. And that's how you end up with Station 4 being pushed out as many years as it is. We're going to be paying, the efficiencies of the electricity and HVAC type stuff and repairs, the non-compliance with ADA, the crack in the floor, the bowing of the wall, all those things are still there. And whether we fix that and spend money to do that, or whether we just let it get to a point that it's no longer, and moves that forward, we are going to be evaluating all those points in time along the way. And if the board had a direction to say, listen, I'd like to see that station moved up 3 years, 4 years, we can do that. In the budget, we can show how and where you would do that. So this is there are 8, 10, 25 different ways to do this, to be honest with you, and with different outcomes. But the goal here was to have level funding in our capital reserve fund through the budget, and our projects that are then funded from the capital reserve to have some method of the madness so that we constantly have a plus cash flow.
And
So-
in that respect, then, Station 5, the up the canyon station, having it precede addressing Station 4 is because it costs less money and also time is of essence in dealing with.
Yes,
Yeah,
so
so
definitely there's a
please,
little less money, so if you wanted to flip-flop those two, you could totally flip-flop those two. You'd see there'd be $100,000 variance in those if that 4 became a higher priority, or we get some sort of
The
report.
clock's ticking on 5, I thought.
Yeah.
Clock is ticking on 5. We have a little more time than initially understood, so I think we talked about it a little bit. So there's more time that 5 isn't as pressing immediately with the lease piece. But the relationship with state parks, I just talked with them yesterday and saw some plans, and they're working with ADOT. Our biggest issue right now is trying to figure out where that access, ingress and egress will be allowed to be. And where we wanted it to be, they said there was over $1 million cost to put there just in design, and the curve of the road and everything, they wouldn't even allow it to be there. So now they've actually are working with ADOT, and they've moved the entrance further north. So I just got it late last night and had meetings all night, so I'm haven't had time to study it, but we need to look at that. Is it practical? Is it going to work? Is it, and it's a preliminary drawing. But most important, we're taking our steps and continue to do it in a timely manner, and thinking that we'll be into next fiscal year or in fiscal 20 until we start that actual project. Or maybe we start it in late 19 and the first payments aren't due till 20. There's a lot of variances in how this goes.
And-
flexibility.
And while the issue with the lease, we may have more leeway on, we still want to take advantage of the opportunity that the governmental agencies are presenting.
Correct.
And not risk that there'll be a change.
Correct, and it's so there's the practicality of getting it done with this esprit de corps, which is happening right now with all those agencies, which is great. It's about the organization, and moving it further north is about the enhancement of our operation and response times. So this is good, we're working together, that's helping make it happen. And we're not just moving it because this is happening, we want to move it because it's enhancing our response times and our ability to cover Oak Creek Canyon, as well as the operational needs of that station that aren't being met with size of apparatus bay and height of doors and, the building itself, et cetera, et cetera.
And will it help the ISO rating
Yes,
for the residents that live farther up the canyon?
correct.
Yeah.
That was me.
Chief, and again, according to this chart here, we're looking at Fire Station 6 being paid for then by 2020?
Correct, 2023.
20
2023, the top line there.
Right here. Right here's
Oh,
where it's
okay, I
paid
see the
off.
last
Yeah.
payment there, okay. I just figured that the red bar started for Fire Station 4 was the end point of Fire Station 6.
Yeah, we just showed that out from where we moved it. We had to move it, we ideally wanted it in 2021, but to make things happen and balance it out, we pushed it out. And the point to show you that is there will be costs associated with operating that building. And if anyone has tolerance or they become such that it's cost prohibitive and we need to move that up, I'm telling you today, there's flexibility in the program, in the capital plan, but that's where we're gonna try to live unless you give us other direction for that station specifically.
So coming down, kind of go to the station replacement or basically remodeling here. So now we're getting into actual capital dollars being utilized. Up here is where debt service would be utilized, or at least purchase service would be utilized for the project. Down here, we'd actually use cash, and no debt would be incurred in this process. And so we look at, kind of the various projects, ACs, remodels, paving, AC and site rehab for, by year.
And those are all items of which we talked about occurring in the bond, which didn't pass, and so these are the projects we still have, and that's where you're seeing them.
Going down, so then we also have our apparatus and vehicles. And here, again, you're seeing, for example, down here where we've got this number, we've got a highlighted column and no number. It's because that's where it was originally planned in order to kind of make the plan work with balancing other needs. This is where it's been pushed down. And again, just trying to illustrate that while this is what initially is being presented, it could change at any time. And as well as any of these items presented in here are all items the board would entertain on an individual basis. It would not be something that by accepting the capital improvement plan, you're saying that this is the purchases and this is when it's going to happen. Those are still going to come to the board on an individual and case-by-case basis.
But the money saved for that purchase is happening today,
Correct.
and it
Correct.
just continues. And it's the year in which you have it purchased is just an accumulation of all those years of saving.
Correct. And I'll show you kind of that accumulation here in a graph in a second. Going down additional shop numbers, and then finally we come down to our, did I show you these yet?
No.
Yeah, here's again, additional command staff vehicles were all pushed out. Some utility vehicles and other items, basically apparatus were pushed out.
Gabe, do we show anywhere on this for those apparatus that we're replacing? Are we showing in our budget where we sold them and gained that revenue?
No, so the sale of those will be, essentially additional revenues that in the year that we're planning on selling, we will project and budget some revenue for the sale. But then those additional revenues can either be put back in the general fund, or we could put it back in the capital fund. It'll be up to the determination of the board at that time. But our plan is not based off those monies going right back into the capital fund. But on a year-by-year basis, we do budget dollars for sales of assets.
So one of the items I want to point out, about midway down, you see Snowcat there, and in 2022, we're going to replace our 1972 or something like that, right out of the shining Snowcat that we have. It is a old, like, it's like almost as old as me, like, so it'll be 50 years old or something after we sell that, I believe. I forget what year it is, but it's pretty old. And actually, if you were able to see those shop numbers, you could tell what number it was. But,
I know it's cut
oh,
off,
I don't think
yeah.
there's a shop number on it. Anyway,
Number one.
so I've seen some confusion that we need 2 Snowcats. We won't have 2 Snowcats. When we buy that one, we will surplus the other one and see if anyone wants a 50-year-old Snowcat for whatever reason they would need that. So that there will be just one. But that Snowcat, for instance, while it's a large expense, is our only access up to get to critical infrastructure on many, many towers. And so when it snows and it's got to get up to these different places, there aren't better options than the Snowcat. And so that's where we're at. That's not a brand new Snowcat. That'll be an old, used, surplus Snowcat that we're going to buy. I forget what a new one costs. I forget the numbers, but anyway. I remember hearing people talk about that back a few months ago, and so we won't have 2. We'll be selling that one, and we'll have that one, and that's again a used price. So we understand what that is. And as Gabe said, we moved things out. You can see some of those orange things where we moved things 1 year, 2 years, scrapped it for totally, and there's just all kinds of different stuff we've done in there. And those shop numbers, when that is illuminated, if you will, if that was expanded there, you would see the shop number. The first 2 numbers of the shop is the year that it was purchased, and then the -1, -2, -3 is whatever year or order that vehicle was bought in. I don't know that the older vehicles, the 1, 2, 3, 4 is the exact order they were bought in necessarily, but that's how we number them sequentially. Going forward, they will be more precise in how they were purchased that year. But the need to maintain that fleet and balance our surplusing ability, there's a break-even point or a point of no return. And so we are working with a volunteer, Lance, who has an extensive experience working in the fleet like this, and we'll begin, once we get 2 or 3 or 4 years of data, we'll have good information, and we'll be able to actually tell this truck should be sold here because of our exact maintenance costs, our exact retail cost on purchasing a new one, and the ability to sell an old one, and know where that sweet spot truly is through Lance's extensive experience and willingness to volunteer and help us. And so we're looking forward to that. And while these are great benchmarks for where these vehicles should be replaced by time and miles and all that stuff, this is a practice, a best practice that you'll find many organizations do. We're going to be able to elevate that a notch with the fairly inexpensive software that we've recently purchased and the expertise of Lance to help us do this fleet maintenance type project. And to your question, then we will sell them and at the max time to get our max return, or keep repairing it. It's cheaper to repair it, not buy a new one. Even though we said we're going to buy one here, that truck is costing us no money in maintenance. It's got plenty of time, keep it. And we'll become more data-driven in that, which is an excitement for me, and the efficiencies of which Gabe spoke to.
And then the last piece on here is kind of our equipment projects, where we've got a lot of our communication, IT infrastructure, as well as, down here you see rescue airbags, EPCR upgrades, or thermal imaging cameras, so all of our, rescue tools and equipment as well.
So the critical piece to all this is that this is to me, this is a complex, dynamic situation. So right now we know that our air packs have a lifespan of, this long. Technology, repair, reliability, we know we're going to replace that. That's a $700,000 repair. or replacement costs. That's a very large number. And is it best to do that over 3 or 4 years? Maybe for the budget it is, but for technology, we want to have the exact same air pack, so we have the exact same parts and pieces for repair and familiarity with our technicians. And so we want to look at that and go, wow, maybe we want to do it over 3 years. We've got it over 3 years right now. You know, we might look at that and say, you know, there's coming up with a model change, which we don't know about now in this year. If you don't, that third year, you're gonna have to bump year 3 into year 2, or you're getting a different generation air pack. I can't predict that stuff. I'm good, but not that good. And, you know, I
Well,
think,
but you can finance or at least purchase that over 3 years.
what's that?
You can finance or at least purchase that over 3 years.
And
get
that
it
might
all
be
at
a
once.
lease purchase. We might go, let's do a lease purchase at that point, and that money, instead of then being in those line items, would go up into the lease purchase part and become a debt service, but would become the same money. Get the point, right? So, like I said, there's 20 different ways to do it. We can't create all those, but this is giving us the bandwidth to do that. Programming out all the things that we have to do, we've always done this. This is not anything new for us. But we had a recession that occurred in 2008. We had a recoil where things were not done, where projects were shelved, were not addressed for reasons that were out of my control and before my arrival. And then arriving here and figuring out where the fire stations are was kind of a priority and who worked here. So we begin to turn these things on and begin to start going, wow, we got some, that 4 or 5 year time span has created a detriment for us and a catch-up phase for us to do. Not to mention, on top of that, because of that recession, all the money that was in the capital reserve fund was spent for operating costs,
Gone.
decisions that were made. So we're faced with all this stuff here, and I think your last piece is about the funding of this. And to create that level of funding is what Gabe's gonna talk about next, to try to accomplish all these things we're trying to do and look 10 years out and realize what we're gonna have. And you know, technology changes, costs change, some go up, some go down, but this is where we're at. And I'm pretty confident that we've got a good grasp on what life looks like today, but this will change again tomorrow or next month or next year because stuff happens. And so I'll give you the funding part.
Yep, and here's our last piece on this, is the funding piece to it. And, so what we have here is our total funds, and we're just looking at the capital funding and capital planned expenditures. So we look at starting kind of this fiscal year we're in, we're projected to establish the fund with, first, this blue line represents the board restricted $2 million, which will stay in as restricted funds. Then we have our capital fund piece here. And then finally, the smallest portion being our financial reserve fund for our total fund balance of just under 6.5 million at the end of the fiscal year. Then we start looking at this blue line here representing our capital funding, and as you can see, our plan here is to take the capital funding line and slowly increase it to the level that it needs to be at. And the reason for that is trying to mitigate and control impact on the levy, as well as meet the capital funding needs. And then here you'll see that this lighter blue line represents our capital funding plan. So there's years where we've got very little capital expenditure, but we're still funding at a rate higher than what our expenses to help build this fund balance to meet the times and periods when our capital funding expenses or our capital expenses are higher. And so this ebb and flow here of the capital expenses will continue to rise and fall. But as you can see, the green bars here represent our capital funding, our capital fund, I should say, not funding, always having available cash in it to cover those expenses. So if we didn't have available cash, we'd see this green bar disappear, and then we'd have to be pulling from our financial reserve, increased levying, or if the board so wished, correct, dip into the restricted funds. So as kind of Chief was mentioning, and the board was asking about, what if we need to push up one of the station remodels or station rebuilds? So that could be done, and you can see that because we have capacity. You see, we never take our capital funding or capital fund balance down to zero. So if we need to alter this line here, which is our funding line, because we're gonna rely on the levy for maybe lease purchase earlier than we anticipated, we can, but in doing so, we've gotta be cognizant of years in here in 2026, where we come close to, we have a smaller balance in that fund. And whether that means we manage that through lowering the funding, pushing out a project. Oh, battery's gonna die. So I've got 6% left of my presentation.
Means it's almost lunchtime.
Yeah. And so that's kind of some of the fluidness that we now have, as well as, again, the thing I hit on the most is not doing this to the taxpayer from a levy standpoint. And the level funding kind of allows the taxpayers as a whole to pay for assets more over the life of the asset, and not just, at the time it's time to buy an asset.
Gabe, is the downturn in the capital plan expenditure line where it comes down, is that directly correlated to like a purchase or a start of a project where we're spending the money?
So this downturn here would just be simply a year that we don't have much capital expense need, based on the plan, and then these peaks are gonna be where we have a high amount of capital expense or a higher amount of capital expense. So,
So we could start a project at that point.
right, correct. So like if you look, here, well, I'll come down here, you'll see in, 2025, we're, projected to spend less than $1 million in capital projects, but you go to 2026 and we're almost 2.5 million. So there's obviously a big project that's gonna be starting that year, that wasn't in the prior year.
So there's two things there that you said. So that we could start projects anywhere in there that would understand that will impact that green bar, how much you're gonna have
Right.
in the reserve. So on those years where the sawtooth line is up above the black line, we're spending more than we actually funded.
Right.
And in the years it's down below, we've spent less
To be funded.
than we actually funded. So if we wanted to spend more that year, if in 2023 we wanted to make that line come above that, where it doesn't dip, it goes to the black line, let's say. That would mean that green bar in 2023 or 24 would be less because we'd be having less reserve capacity. And it might be fine that year, but then you get to 2026 and now that green bar doesn't exist. We would have to increase the capital funding. So it's fluid, it's a teeter-totter, if you will. The other part that's really important to understand is that my goal is the sustainability part is we want to buy a fire truck here and a fire truck over here and a fire truck over here and a fire station in here and a fire station in here. When you start to overlay things on top of each other, well, sometimes there's volume discount, which can be attractive. Well, we got the money, why don't we just buy 2 fire engines then? We get a bigger discount or something. That's valuable, but somewhere down the line, when none of us will probably be here, and those trucks gotta get replaced, and the economy's in a different place, you've compounded somebody's problem, and I don't like to do that to people, even though I'll hopefully still live here, but I definitely won't be the fire chief. It's nice to space these things out so that you're having continuous process. You're getting technology at different intervals, and that's valuable to me. Some people will say, hey, I'd rather buy 3 engines. They're all the same. I have the exact same parts. That's a valid reason why you would want to do that system too. And neither one's wrong. It's just, I like the spacing out piece personally for a lot of other reasons. But we may decide someday that, hey, let's buy 3 trucks because it's going to save us this much money. And that's what you guys believe. You're the bosses. We can do that too. And that's why this capital plan is a concept. It's in stone, but we can move it a little bit at times depending on what our needs are. The Type 3 engine is a great example. We moved the Type 3 engine and we moved it back out, and then we moved it back in because we had the one that is not doing well and there's out of service now, and our other one that's still not exactly right. So we moved that in, and we'll be coming to you in May, asking you to possibly June. It might be June now. I don't think we're gonna get the board communication done. In June, asking you to purchase that engine from the capital reserve fund, and and we can do that as a different fund.
Right.
And allowed to do it. It's not in our budget, it's in the capital reserve budget. And it's a capital reserve expense, or a capital expense. So, any question, that all makes sense to you guys?
Yes.
Okay.
never stand between lunch and a great
That's all I have.
presentation.
Is that it?
Okay.
That's it. Thank you.
Any other questions from
You
the
ran
board?
out of juice just in time.
I know. I've timed it perfectly. I was like, I'm not going to let this go over.
Chief, what do you have allocated for lunch, as far
Whatever
as
you'd
time,
like, sir.
time-wise?
Whatever you'd like, the longer we go for lunch, the longer we stay. So I would say 15, 20 minutes if you like. But it could be an hour if you like. It's up to you. We've
30.
got sandwiches and chips over there and maybe a cookie I see.
All right, why don't we break for lunch to 12:35? That'd be good, gives us 30 minutes.
Sounds good.
And then we'll reconvene with our next speaker.
Perfect.
Thank you.